Hey, what's up guys? John here. The U.S. banking system is set to be rug pulled in 46 days. This is on their website. This is on the Federal Reserve's website that they are getting ready to rug pull all funding. This is going to impact small, medium-sized businesses and all 330 million Americans. I'm going to show you exactly what is about to happen, but this is far greater than a just America problem. This is happening in European central banks, happening in Canada. There's problems going worldwide.
This is the most intense period for the global banking sector.
A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
And I believe the next month to a month and a half, we're going to see massive change. I'm going to break this down for you. I'm going to show you the facts. I'm going to show you exactly what's going on to help you and position you for what I believe is going to be the greatest transfer of assets in American history and probably the greatest time to build wealth that we've ever seen. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's going on in the economy. And if you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for tomorrow, for Friday. Take a look at this. So now, they've told us all that we're going to see a soft landing. Right? European Central Bank asked some lenders to monitor social media for early signs of bank runs. Right? This came out yesterday. Reuters. Bank runs. Why? Well, and look at what's happening in Canada. Operational details for government purchases of Canadian mortgage bonds. It's a bailout, $30 billion bailout for banks. And so when you start to look at this, you're like, all right, well, let's look at what the Fed is doing. Let's look at what the Federal Reserve is doing right now. This is their Twitter, right? It announces the Bank Term Funding Program will cease making new loans as scheduled March 11th. So March 11th is 46 days from now. What is this BTFP program? The BTFP program was created to support American businesses and households by making additional funding available to eligible depository institutions to help assure banks have the ability to meet the needs of all the depositors. So they're going to basically rip funding from small businesses and everyday American consumers. For context, in the top 100 cities in America, the top 100 cities, 30% of all of the residents over the age of 18 are behind on bills. It's a massive, massive number. So when you start to rip the liquidity from these Americans, what do you think is going to happen? Defaults and delinquencies are going to continue to rise. And during those types of environments, what do people do when they can no longer make their bills? They sell. They sell their cars. They start to sell homes. They start to sell off assets. And that's what we're walking into. So this is on their website, came out yesterday. Federal Reserve Board announces Bank Term Funding Program will cease making new loans as scheduled on March 11th. The Federal Reserve Board on Wednesday announced the Bank Term Funding Program will cease making new loans scheduled March 11th. The program will continue to make loans until that time and is available as an additional source of liquidity for eligible institutions. During the period of stress, the Bank Term Funding Program helped assure the stability of the banking system and provide support for the economy. After March 11th, banks and other depository institutions will continue to have ready access to the deposit window to meet liquidity needs. As the program ends, the interest rate applicable to BTFP loans has been adjusted, such as the rate on new loans extended from now through the program's expiration and will no longer the interest rate on the reserve's balance in effect on the day the loan is made. The rate adjustment ensures that the BTFP continues to support the goals of the program or the current interest rate environment. This change is effective immediately. All other terms of the program are unchanged. The BTFP was established in Section 13.3, the Federal Reserve Act, with approval of the Treasury Secretary. You start to think about what's happening. Funding is going to continue to dry up. Interest rates are going to continue to rise. And so with this BTFP program. So they're going to make things very, very, very challenging for a lot of small businesses. Now look at this. The Fed emergency BTFP increased by an astounding $14 billion this week to $161 billion. Just like January 2020, Powell is ramping up liquidity injections right before he pulls the rug on banks. Now, I've been talking about this, saying this is the biggest rug pull in American history, what we're walking into right now. Same thing is happening right now. So it's going to get very, very, very interesting. But let's just look at what's happened over just the last week, what all the major media outlets are saying. Banking crisis plays out at America's smallest lenders, right? This came out December 27th. This came out 3.5 weeks ago. Then you have this, came out yesterday. Regional banks had another ugly quarter. Profits are down sharply as KeyCorp and others as high interest rates exact toll. Then you had this. This came out March, right after the regional banking crisis. Small banks lost $109 billion in deposits during that banking crisis. Well, then you have banks laying off 60,000 employees. So you have to ask yourself, are banks all aware that a massive rug pull is coming? I would bet yes, and I would bet a lot of very, very, very smart people are betting on the same. Henry Kravis of KKR, one of the largest private equity firms in the world, he made a very interesting statement I'm going to get into in a second. So you just type in bank runs and you look at all these articles that just came out recently. 1 day ago, 9 hours ago, faster deposit flow will affect bank runs, ECB. A new era of bank runs, demand for regulatory approach, part 1, 3 hours ago, American Banker. So the Wall Street Journal put this article out January 18th. January 18th, today is the 25th, 7 days ago. The bank runs are faster now. Regulatory calls for stricter rules on flighty deposits. It's interesting to me that Janet Yellen says and Jerome Powell, they say we're going to have this big soft landing. Why are all of these outlets all saying that bank runs could happen? Well, probably because something big is about to happen in this economy, something really big. And I think when we look at what Henry Kravis and what others are saying here, it's very clear what will likely happen next. So bank credit, bank lending, right? Bank credit contracts for 3 consecutive quarters, raising major alarms. This has not happened since the great financial crisis 14 years ago, right? 2010. The second time in over half a century, with the last instance occurrence during the Great Recession. Several prominent figures in the financial world, including Jeffrey Gundlach, a private equity billionaire Henry Kravis, have expressed bleak outlooks for the economy. Economists like David Rosenberg and Steve Henke, along with market analyst Gary Shilling, are predicting a significant downturn, with Shilling suggesting that a recession might already be in the process, according to Business Insider. The decrease in bank credit signifies that companies are borrowing less due to the increased cost of loans, a consequence of the Federal Reserve's interest rate hike. These hikes, which raise rates from near zero to approximately 5.5% between March 2022 and July 2023, were aimed at curbing high consumer prices, but have also made it more difficult for business to access credit. What do you think will happen coming March 11th in 46 days? Credit is going to greatly tighten up. That is what's going to happen. And when that happens, look at this. Credit card delinquency rates at a 10-year high. Buy now, pay later, holiday debt hangover has arrived as consumers wonder how they'll pay their bills. So when you add all this stuff up, you add everything up, you start to see the layoffs happening at all the big companies. The big banks are issuing big layoffs. Credit is going to continue to get rug pulled from the Fed. What do I think is going to happen next? Well, I believe those that have stable income, those that have cash in the bank, or they're working on stable income, they have cash in the bank, they have great credit, they have very low consumer debt. That is extremely important. When you're borrowing money from 28, 30, 32% from a credit card company and liquidity starts drying up in the economy, it's going to get very, very difficult to pay back those bills. And when you see a situation like a late payment on a credit card going on your credit report, that will sit on there for 7 years from the date in which it was filed. So many people, they look at a late payment and say, it's not a big deal, it's just one late payment, it's just 2 late payments. You can take your credit score from an 800 into the mid-6s. So, and in this environment where banks are tightening up lending, it becomes a very, very, very big deal. Banks lend money into existence. That's what they do. And so they will continue to lend, but I believe it's only going to be to the A-plus borrowers, the large institutions, the business owners that have great credit, the Americans that have great credit. Those that are really stable will be able to prosper, my belief. And those that are not are going to have a much more difficult time. Same thing happened in the great financial crisis, 2008, 2009, 2010. During that period, credit dried up. Those with bad credit, they were unable to get access to funding. What do you think is going to happen in this situation? When you see this situation, like the concept of a soft landing where inflation is reduced without triggering a severe recession remains a topic of debate among economists and financial leaders. What do you think is going to happen? Even Jamie Dimon is saying that he remains skeptical of such a scenario. The same man that sold $141 million of his own stock the last quarter. Look at Zuckerberg. So what $500 million worth of stock the last several months? The smart people are selling. The smart people are playing defense. And I think the reason for it is because when they're sitting on all that money and they're able to get access to all that credit, they're going to be able to go out there and buy land, infrastructure, businesses. They're going to be able to scale and grow beyond their wildest imaginations. What do you think about this entire situation? Drop below. Let's have a conversation about it. If you'd like to fix your credit, we would love to give you a free strategy session at greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to greatcreditfast.com. I believe the next couple of years, people are going to be forced to sell. And that's the time you're going to want to take this eroding fiat currency, this depreciating fiat currency that's going to be coming, because you know massive QE will likely be following in the next couple of years, and buy hard real assets just like what the rich will do. So if you have any credit issues, we'd love to give you a free strategy session at greatcreditfast.com. You can click the link in the description just below this video, schedule that call, and catch you in the next video.